Hi, my dear Tally users. This video is related to fixed assets module in Tally. Let's check what are the options we have given here. Here you have ledgers. Okay, this shows all the fixed assets related ledgers. Okay, can create, display, or alter. Have an option. And in the transaction, we have purchase, addition, sale, disposal, and depreciation. And fixed asset register as per Company Act. You have these many contents here. If you want some additional columns, you can enable this. So it shows like this. Okay. So asset ID, serial number, asset ID, asset name, opening balance, date, and year, life, and opening balance, cost, purchase cost, addition, any, penny, and subasset sale value, if any, and gross book value, last date of depreciation, depreciation rate, accumulated depreciation, net book value. Okay, so here if you come to as per income tax, here you have these many contents. Okay, so when you go to the ledgers, uh, see, this is demo company. Whatever the transaction I have, I will delete all the transactions. Okay, it is 327. Select, delete. Okay, now we don't have any transactions here, so I'm going to post some transactions. Before that, we'll see what it is showing now. These are all showing only opening balances. Okay, there is no addition here. So when I go to ledger, what are the options we have given in the ledger? Let's see. I'll take for example computer. Here in the computer we have asset name, asset ID, and here it is group name. Okay, so if you want to set the percentage, depreciation percentage, no need to go into each asset and set. We have made the task very simple. So we have given the option rate of depreciation. We can set here in the group. It will be applicable to all the related assets inside that group. Okay. So 4 to 5 group you may have, and you may have hundreds of assets. So in the 4 to 5 groups, if you set, it will cover all the hundreds of assets. Okay. So when you go to this, for example, define auto sale depreciation. Depreciation for auto depreciation, we have given ledger predefine. You can predefine here. Debit ledger, depreciation expenses, credit ledger, accumulated depreciation. Or you can, if you don't want to show the original balance in the balance sheet, if you want to see only net balance, you can directly credit the asset. Okay, and the next is we'll post one sample entry, the transaction. I'll go to addition. Okay, the addition, you have two options, two columns here, first half and second half. So I'll go to transaction addition. First I'll do at 1/4/26 or 1/6. I take today's date, say 26. For example, let's say bank, we have paid through bank, and this is cash purchase, let's assume, not credit. Computer, for example, let's say additions. We have done some addition. There is already the opening balance for this computer. I have done some additions, for example, 10,000. Let's see. So when you go to risk register shows in the first half. Okay, I will take one more voucher transaction addition. I'll take 1 October and the bank. Take different assets. For example, 12,000. Then we go to register. It will show in the second half. Okay. So as per income tax rule, for the first 180 days, it comes under first half. After 180 days, it comes under second half. Okay. For the first half, you have to calculate 100% rate. Okay, depreciation rate. For the second half, you have to calculate 50% depreciation. So if you have multiple assets, it is a very time taking task posting depreciation for each asset. So what you can do is at present I have only two transactions on two additions. Okay, there is no other transaction. You can see 4, 26, 31st, 3, 27. No other transaction. Now I will post depreciation, auto depreciation for all the assets. Select control space, select all the assets, click on auto depreciation. Let's see. Go to display table. 31st, 3, 27. We have 1, 2, 3, 4, 5. This one, depreciation increase. And it's calculated properly. You can see, you will check whether it's calculated properly or not. Income tax, for example, here it is showing annual value and depreciation value. Let's take this one. Okay, this is 60,000 plus 12,000. One is in first half, the other one is in second half. Okay, and the red 26,400 depreciation value. Go to calculator. For 60,000, what is the 40%? 24,000, right? 24,000. For 12,000, it should not calculate 40%. It should calculate only 20%. 1,200 into 2, it will be 2,400. Here 24, 2,400 will be 26,400. So it calculated properly. 6,400. Go to table. This is the entry. Okay, related depreciation. If the define while defining the ledger, if you make any mistake inside the ledger, it will carry as it is. Okay, so you have to define properly here. Here we have not defined credit ledger, so it's posting something. So here you have to take expense ledger, depreciation expense ledger. Here credit ledger means either accumulated depreciation on computer or direct computer asset you can take. Okay, so it will post properly. So I will delete this, I'll delete all and post again. Okay, depreciation, posted. Go to this depreciation expenses credit, cumulative depreciation credit. Okay, and the calculation is also proper. And this is for the day. These are the options we cover in this module. If you want any further additions to this, we can do any kind of modification or additions, deletions. Okay, thank you for watching. Meet you next time. Bye bye.